But this next piece, Matt, from this is the Federal Reserve Bank of San Francisco. Remote work and housing demand. Too long, don't read. Remote work increases demand for housing. Right? Did I get it?
Yeah, it is like as I was scrolling through, I was like, all right, yeah, I get this. But there is some good charts that really pin it down. It is, I think, a significant piece of research. It is, you have to have these data that upholds the speculation and the guessing. Otherwise, it's just speculation. So I like the idea that the San Francisco Fed crunched the numbers and found out that yes, remote work increases housing demand. But the key is like how much and the implications. And I think that this is it. The real stakes of this conclusion lie in the fact, and they say this in the article, that remote work has not by any means gone away and is not expected to do so, which would suggest that whatever effect that remote work has had on housing is also going to continue. Just to get in specifics, it says in the article, after adjusting for the role of migration, our estimates show that 1 percentage point more remote work causes house prices to increase by about 0.9 percentage points. That's not nothing. In their conclusion, exactly. It's like almost 1-to-1. In their conclusion, they see remote work as tied to a full 15% increase in home price growth. Also, to repeat, it's not really going away. So this is a sustained moment, and it can maybe explain some of the uptick that we saw in home prices, because now homes are having a different function. We've talked all about this in lofty speculative terms for the past couple of years, and it's great to see this, this fine point and this, this real relationship that they mark here. So bravo for the San Francisco Fed, San Francisco Fed to produce this research.
And so I guess the assumption would then be that a declining workforce that's working from home, individuals coming back into the office would decrease demand for housing. I mean, is that the same assumption that it's made if it's such a directly correlated? And then so we would assume that even though it's we're not going to pre-pandemic working from the office, working from home levels, if more individuals just on a percentage basis are going back to the office, we should see some of those declines in housing demand in general.
Yes. What I think is particularly interesting is that the main decline in working from home happened from really right the moment kind of where I'm going to have to guess here, but it was like late spring, early summer of 2020 down to like the fourth quarter of 2020. That is when we really saw a falling off of remote work, and we really saw a lot of people return to work. It was at its peak, above 60% were working from home, and then it shot down to, at the beginning of 2021, it was about a little over 30% were remote working. And guess what? It's about a little over 30% right now. It's gone up a little, it's gone down a little. Maybe it's a little under 30% now, but it's definitely not the steep falling off point. And, from 2021 to now, we've seen a lot of home price growth. And that's where, so I think there may be a little bit of a lag in terms of when the home prices grow, versus, when we've seen versus like the sustained demand from remote work. But like it's here to stay, it seems like.
And so, Matt, do you think this is more of just people, the value that they're placing on their home and where they live and their space, and the spaces that we live in? It's the home, it's the office, and then there's talk of a third place as well, whether that's like the park or the bar or whatever. But like the home, more emphasis than the workplace, and just there's more attention focused on it. Not always necessarily I need more space, but maybe better space. Something. But I guess the question that you ask, Matt, is that relationship and the shifting in the value of like where I live, does that have legs even if you start working back to the office.
A couple years ago, I was kind of thinking in those area terms. It's like, well, there's a sentimental value, and home buyers aren't buying, on cap rates or anything like that. They're buying because they want the home, because, there's an emotional content to it. There's an emotional content to the greater value. I think when we were when it was kind of locked down, that's a lot of the discussion. I'm thinking more and more, it is like the financial, the kind of bare bones. All right, I'm building an office in my house. I am dedicating this space to it. It is a concrete kind of economic decision that there's a space in the home now that is functioning as the office, and that has a discrete cost now. It may not even be like I think and value it more. It may just be we need that space in the house, and it's becoming more valuable, and there's more demand.
I'm going to be doing some work from home at some point. I need to have this dedicated space. But does that, how much of that demand was pulled forward in the pandemic, and then we pulled forward from those future years? Like, did everybody get that extra space in 2020 and 2021, and they're good?
That's and I don't know if that's the case. I don't, but that's one of the major questions that I thought about when I was reading. And there's a couple more reports that we'll cover about the state of the apartment market. But I think that the fact that remote work is sustained and this housing demand will be sustained, I don't think we're going to have like a reactionary dip that's kind of underwater. I think that because these are the new situation, this is a new situation, we may see a bump up that kind of stays there. That's my. The Fed's gonna prove me wrong, and I think that's a really big factor right now.
We just gotta
when
get
you're
out of the way.
talking about remote work, I don't think that the people are going to realize, all right, well, now I hate my house, I'm going back to the office. Remote work will gradually decline, but it's not going to go away.
Well, I'm curious, Matt. I'm just bringing up another article that wasn't necessarily in our reports from August 23rd. This is from CNBC, although I'm not sure if they did the initial report. The report was done by a recent survey from Clever Real Estate. And it says that 72% of of home purchasers in the last several years, 72% are having regrets about their home purchases. And then 30% of those respondents have said that they believe that they spent too much money buying their home. So it's interesting. I think there is some buyer's remorse, but how much of that is linked to the way that those homes are being purchased? Quick closes, no inspections, the crazy over ask. They were just in this emotional frenzy, and then they're like waking up like they got the hangover, and they're like, what did I just buy? I just paid over asking for a place that I have to put more work into it. It's falling apart. It's old. There's always stuff at a house that doesn't work out the way you want it to. But are they stuck because they still got a low interest rate, good payment, housing? The other options right now, they'd have to take a major haircut and downgrade. So it's an interesting environment.
Yeah, I would say so for sure. Especially considering that situation, like we're not at that place where people are trying to sell because they think tomorrow is going to be cheaper. But I'm wondering if that, or when,
if they did, where would prices haven't decreased to a point of where do you go now? If you sell, if you think there's going to be a 10% price decline, well, your house may be up already 10% since you purchased it. But if there's going to be a 10% price decline, you sell now, that decline hasn't happened. You still have to go somewhere. So what do you do? And then with the mortgage payment that you'd be paying, you can buy almost, maybe a third of, 2/3 of the house or half of the house.